You're listening to Smart Moves with your hosts, Ann Riley Caldwell and Matt Wilson.
Hey, welcome to today's Smart Moves podcast, where we're talking about the brand new federal law that I'm sure that many of you have heard of because it's been all in the news, called the Road to Housing Act. We're going to tell you how it truly impacts buyers, sellers, investors, veterans, and parts of the real estate process. And most of all, because it's a federal law, what does it really do and how does it really impact people at a local level? And of course, particularly here in Tennessee and Middle Tennessee. So welcome back to the Smart Moves Made Easy podcast. I'm Ann Riley Caldwell, not your ordinary agent, local real estate agent here in the Middle Tennessee area. And I'm here with Matt Wilson, who does loans in Tennessee, Florida, and many other states, loan branch manager at New American Funding. So today we're just going to kind of give you an overview so that you get the real information about what this law covers, what's true, what's not true, what impact it's going to have today, possibly in the future. It does not, well, it passed both the House and the Senate actually pretty easily, which we almost never hear of anymore. One of the things it does not do is allocate a whole lot of money towards these programs, but money may be coming later on. Some of them are pilot programs, which means they're going to do more research and test them out before anything actually happens in some ways. So it hopefully is geared towards helping some communities build homes faster. It's going to cut some federal review rules in certain areas. It hopefully will improve some financing for lower priced homes. It may help manufactured and modular housing funding. It's going to limit large companies from buying more existing single family homes, which has been a real issue here in Middle Tennessee at times. It's going to improve some appraisal protections, as well as with VA loans. There's going to be a little bit of a change, which I think Matt probably does this already, but a lot of lenders probably don't. And it's going to reform several affordable and rural housing programs. Unfortunately, not to disappoint you too much when we haven't even really gotten started, it's not going to lower mortgage rates per se. It's not going to give every first-time home buyer a down payment grant. It's not going to force home prices to fall, which, depending on whether you're buying or selling, you either like that or you don't. It's not going to ban all investors moving forward from buying houses. It won't change, obviously, local zoning rules because it's a federal law. And as I mentioned before, there's not like a ton of money that's been put behind it at this point. But I mean, the goal is to change a few things that are hopefully positive for individual buyers and sellers, and also maybe over time help with the long-term housing supply that you probably hear people talk about. So anyway, we'll hop into the first one, and then we'll ask Matt some questions. First of all, large corporations will face some limits on buying existing homes. This will not take effect until about mid-January because the law passed in July 2026, so it'll be mid-January 2027. This is for large institutional investors that control 350 or more single-family homes. It covers houses and it covers some duplexes. Manufactured homes will be excluded. And it lasts for 15 years unless Congress changes it, which we know can happen all the time. But anyway, here in Middle Tennessee, Matt can probably attest to this. There are a lot of starter homes that need work, certain neighborhoods where companies come in and they buy up a bunch of these houses and turn them into rental homes. They may or may not always have the best property managers. And what it ends up doing is it ends up obviously making it harder for individual buyers to find homes to purchase. So it squeezes the inventory, particularly kind of at the lower ends and what we would consider a starter home for most people. There are things that are still obviously allowed. You see more and more also build to rent communities where an investor comes in and instead of building a community to sell it, they build a community totally to rent it. So that's still going to happen. It will not hurt local flippers. It won't hurt small landlords, second, home buyers. builders, I mean, those types of people will be safe. So I guess the one thing it will do is it will help more inventory be on the market. And also it might help smaller investors be able to buy more stuff. Um, do you have any thoughts around this, Matt?
Yeah, so this was the part of the new Home Buying Act that I was really the most high on until I actually studied the stats on it a little bit deeper. Um, because I thought, oh yeah, it's the big bad investors that's the big problem here. They're the reason why home values have gone up exponentially and all that sort of thing. And they've had an impact on it for sure. And of course, it's going to be regionalized to any local market, where some places it's going to impact it more than others. But um, from what I found, the companies that this is actually going to impact make up about 1% of the total single family residences in America right now. So it's not like it's going to be the magical, silver bullet that I thought it might be to help make it way easier for a normal person to buy a house. It's going to have a positive impact, but don't hang out thinking that this right here is going to be your saving grace in getting into the home buying market, because it's just not. It's going to maybe help out a little bit, but it's such a small slice of the pie overall that it's not going to be something that causes all home values to drop by 10% in the next 6 months or anything ridiculous like that. And as far as I know, if they already own the house, there's nothing that's going to tell them they have to sell the thing either, unless I'm missing something. They just can't acquire new ones, from what I understand too. So with that, that's, you still kind of have that lock-in effect of I imagine if they're not allowed to buy any new ones, one of a couple things is going to happen. Either they're going to set up smaller subsidiary companies of some sort, or they're just going to hang on to the houses they got longer, probably. Probably won't see those come up for sale. At the same time, if it's been managed by some big company that's not local to it and all that, and it's only had tenants in it for the last 5 years, could also probably be not necessarily the best maintained house that you would want to purchase it either. So there's that. That's the biggest thing that I worry about with that was like, is it gonna actually do anything substantial? And it's gonna make a dent, but it's not gonna be a huge one, I think.
Yeah, I mean, I do know there are some neighborhoods here in Middle Tennessee where a lot of those homes have been bought by those types of companies. And Matt is right. From what I've seen, they're not going to have to sell them. Like they don't have to get underneath a specific number. Matt was smart enough to figure out as he started to say it, I knew what he was going to say. They'll find ways, like they'll just start other companies that don't own 350 houses already, probably. I mean, depending upon the details and what they can get away with, I'm sure there's probably some things in there to try to keep that from happening to some degree. I'm just guessing. I haven't read the whole act, surprisingly, but anyway, I mean, I think if it opens up even
Nobody's got
a
time
little
for
bit,
that.
I know nobody has time for that. I mean, even if it opens up a little bit of inventory, I'm not opposed to it. It'll just take a long time to know whether or not it really has an impact, but at least somebody tried. So I don't know. Number 2 here,
Yeah,
we've got,
it sounds good.
it sounds good. Sometimes sounding good's all we got. So we'll see what happens. Uh, we're not there. So we only have so much, we don't have any control. So then part number 2 here, which, I mean, this is only going to help in certain areas and in certain circumstances too. There's a new FHA pilot that might help with mortgages of $100,000 or less. That's with the original loan balance being that for 1 to 4 unit owner occupied properties, which is typically what we think of as residential properties. There's going to be a 1-year pilot. So again, this isn't going to be like an overnight change to anything. And then we'll see how the pilot goes. I'll punt this over to Matt in a second, but basically, I mean, part of it that could be something that comes from it is there would be some payments made to lenders to make those small loans worth offering, which Matt has all the information on that. It may lower or adjust some FHA costs. It may or may not give us some grants for buyers for down payment assistance. There could be some closing cost help, appraisal cost help, title insurance help. But I think the main thing is, I mean, you're not going to find much in most places, especially in Tennessee, under $100,000. But it may help with certain types of purchases. And the big thing, which Matt and I did have a client last year that moved here from California. She took the equity from her house in California and put down a large down payment. So her loan, for what Matt worked on was less than $100,000. I think it was around $90,000. So, I mean, I think for us, I mean, Matt can tell us more details. That's probably the type of clientele that I would see more often than anything. And of course, lenders do make less money. I would think he can answer that question when the loan is not huge. So there's probably some lenders out there that just won't help buyers. So it also makes it harder to get some of those deals done.
Yeah, I mean, I guess the first thing to point out is there's a lot of maybes and could be's in this section of the act. So it's kind of, it's easier to see why it was able to get past the House and Senate as cleanly as it did, I guess, because, anybody can say it could happen. I mean, I remember growing up, one of the most frustrating phrases I'd ever hear from my parents was if I'd ask them to go do something and they'd be like, maybe, or we'll see. I'm like, well, that's not very committal for making plans for the weekend with my friends. That's awesome. So kind of getting the same vibe off this, really. As far as the lower loan amounts, you hit the nail on the head. Like if you're a first time home buyer, there's probably not going to be a house that you want to live in or that would be FHA acceptable or probably have a floor or roof in it for $100,000 in pretty much anywhere in the country. So it would be like a situation like a relocation where they're retired and barely had any extra they had to do. So it's something that could happen. I don't know. You're completely right too, though, at the fact that there's less money to be earned whenever it's a smaller loan amount because it is tied to the loan amount. As a matter of fact, you get down to that $75,000 to $100,000 range. Those loans really just aren't even profitable because it costs the same amount to produce that loan as it does a more expensive loan. And a lot of those costs are fixed. And, another problem there is closing costs. A lot of the closing costs are going to be a fixed expense. For example, an appraisal fee is the same fee if it's a $75,000 deal or if it's a $400,000 deal. If it's a normal house and it's not got a bunch of acreage or something, then it's going to be the same fee either way. That's going to be a lot bigger percentage, obviously, than it would be if it's like a $400,000 deal. So if this was to do anything that helped with some of that or lowered the FHA funding fee or anything like that, could be cool. But it's all in the could be, should be, maybe stage at this point.
Okay, so number 3 is better financing options may come for manufactured homes. It updated the federal definition of it, and it may even allow some factory-built homes without the traditional permanent chassis? This is probably a Matt term, to qualify under manufactured housing rules. It updates FHA lending rules for manufactured homes. It reviews any barriers to FHA financing for modular homes, which is different. There could be possible changes to construction draw schedules if you're getting a construction loan. So basically, this could help people that want to own a manufactured home on land that they own. It could help with modular homes. It could help housing in rural counties where you typically see these. And it could help with homes built in a factory and finished on site, which are modular homes. So over time, there might be more financing options and more types of factory built homes that could be allowed. Obviously, everything is going to depend upon local county and city zoning, subdivision restrictions, if there are any permanent foundation rules, title status, because some manufactured homes are personal property and they have a title. Some are permanently on a foundation, so they are actually real estate. It could make a difference whether the land and the home can be financed together. It could change insurance, appraisal rules. And the big thing is whether the lender will treat the home, as I mentioned, as real property or personal property. Matt can give us like a little mini lesson on the difference in financing on manufactured homes, whether they're attached, non-attached, and also modular homes, which are different in the sense that they are made in pieces and a factory. They're brought to the property and they're actually constructed on the property, which a lot of people, I think, argue is pretty much the same as building a home from scratch, more or less. It's just getting put together, constructed differently. But Matt can talk about what the lending looks like right now in case anybody's interested in one of those types of homes.
Yeah, so on the manufactured front and like the permanent foundation, the not permanent foundation, and it is chassis, by the way. The biggest thing is that if the home is not on a permanent foundation, well, then at that point, it's real easy, comparatively speaking, for the collateral to just roll away like a car. So it's not part of the real property at that point, which makes it not possible to do a mortgage on it based on the way that things are set up right now. I'm not familiar with many good loan products out there that are going to allow you to finance just the shell or the building itself without having it tied to the land. That's there are obviously products out there. Probably more specifically, if you go to the manufactured home dealership, they'll have access to some of that stuff. Um, but in an ideal circumstance, if you're looking at a home as an investment, you want to tie it to the land, because the other factor is if you move the home more than the time that it gets moved to the place that's supposed to be the land it's on, it's unfinanceable by any traditional standards at that point. Um, so you don't want a home that's been moved around a bunch, you know. That being said, you know, if they update what's required out of the FHA stuff to where maybe they will allow FHA loans to be not permanently attached or something like that, we'll see. Again, it's there's a lot of maybe in here, and I think that's why this may have had such an easy time passing through everything. Is that, you know, it's all, well, we may get ice cream tonight. We'll see how you act. Is basically the the thing that's going on with this whole situation so far. Um, if your parents never said that to you growing up, then I don't know what they did. Um, I say it to my kids all the time now. But anyway, there are plenty of manufactured homes in Tennessee. I finance them somewhat regularly. One thing to note is that even if the FHA themselves decides that they're going to allow some new stuff, that doesn't necessarily mean that all the lenders are going to allow it at the same time. I would imagine my company would probably be on the forefront of that, but a lot of them are not going to, because, you know, for example, like FHA will go down to a 500 credit score in some circumstances, but I know of a lot of lenders that won't do an FHA loan for you without a 640 credit score because they don't want it. There's some lenders that just won't do a manufactured home to begin with. And in any case, you're going to have more expensive pricing on a manufactured home. And what I found is that sometimes your payment winds up closer than you think to a more expensive house just because the rates are worse because it's manufactured. Now, when it comes to fixing the housing crisis, if you want to call it a crisis, then there's not a much faster way to fix it than manufactured housing, because you could pop one of them up in a couple of months and in a bad situation, you know, versus it taking 6, 7, 8 months to do a site built home. Now, to your point about the zoning and restrictions and all that sort of thing, you know, if you got the McMansion next door, it's seriously doubtful that you're going to be allowed to go and plop down a manufactured home and be the little guy next door unless you live out in the unrestricted zone in the county. Also, the other big piece is if you're going to do a manufactured home, for the love of all things, make sure that you have the thing detitled. You touched on that. When it's got a title, it's like a car. It's personal property versus real property. You have to have it detitled when it's permanently attached so that it becomes real property and not something that you could theoretically hook a truck up to and just drive away with. Mortgage companies, as it turns out, don't like it if you can drive away with the thing that we got the mortgage on. So, and then two, when it comes to your point about modular homes, for a while there, back in the day, modular homes got used kind of interchangeably with manufactured homes. It was like a PC term. But in reality, modular is like, because they didn't want to be like, oh, you live in a trailer or whatever, you know? So it was the nice way of saying it. But it's a truly different thing. It is building a house in chunks and plopping those chunks down in a stick built fashion faster on location, but you kind of built it in a warehouse somewhere ahead of time. Um, I've never knowingly financed a modular home in my career. There may have been some of them that were technically modular, but because when you get in the house that's a modular home and look at the studs, they're built exactly the same way, possibly even stronger because you had a cube that got dropped off versus somebody bending boards into place on location. Um, I've never had anything come back and say this is a modular home in my career. So anyway, somebody, if you're another mortgage person commenting on this, tell me how you knew it was a modular home. Because if title doesn't say anything, and the agent doesn't say anything, and the appraiser doesn't say anything, it's just a house. So anyway, but yeah, you definitely want to make sure that you get in touch with the zoning and restrictions committee for your local jurisdiction. And if there's an HOA there, unless it's like one of these, I'm down in Florida right now, so maybe it's one of these like flamingo cities, I call them, with the manufactured homes with flamingos out front type situation. I doubt you're going to have an HOA with a manufactured home. Permissible. Probably just isn't going to fly together. As far as knowing if it's attached to a permanent foundation, structural engineer reports required every time. So whenever you're getting into that situation, just budget another $400 or $500 to have a structural engineer take a peek under the hood and make sure that it's properly tied down and, theoretically less likely to blow away in a good strong wind.
So I have shown a manufactured home that did have an HOA because it was actually a community of manufactured homes. So they had some
Were there
HOA
flamingos?
rules. No, because unfortunately it's Tennessee. I'm in
Okay.
Tennessee right now. I'm not in Florida. I have been I have been in neighborhoods where there are neighborhoods I know of that have flamingos. They just weren't manufactured homes. They were actually regular homes. Pigs and all kinds of stuff out in the
Okay.
yard, real and not real. In like close, actually in Nashville, like Nashville proper, off major roads. But anyway, so I have seen it just because it was an actual like little subdivision off a regular street. So they did have some common areas that they had to maintain. So there is that, but you do not see it often. That's at least not in most of the stuff that Matt and I do. And I have had people reach out to me wanting to sell land that has a manufactured home on it that is not permanently attached. So how I usually handle it is I'm like, I can help you sell the land, but I cannot help you sell that manufactured home. You'll have to deal with that. You'll have to, sign the title over to somebody unless you're going to put it on a permanent foundation and we get it approved, etc. That's like two separate transactions. And as a real estate agent, I can't do it because it's personal property and it can't be part of your land contract. So in that case, they're looking for somebody that may or may not finance the land, but they're going to have to pay cash most of the time. There are some lenders that specialize in manufactured home financing, but you have to put quite a bit down from what I've seen when I've looked into it for a couple people. So is it possible? Yes. Is it something you want to jump up and down and get excited about? Unless you have cash, probably not. And in some areas, I will say manufactured homes, I would say historically kind of go down over time just because they're not as well built, but some of them are very well built now. And because we have a shortage of inventory, sometimes there's not as much difference as you would think. So again, that's why you talk to a local agent who can figure that stuff out for you. So moving on to number 4, buyers may get stronger appraisal protections. I think buyers already have some appraisal protections, but anyway, the law requires USDA, FHA, and Federal Housing Finance Agency to create and maintain a process for handling a buyer's request for a second appraisal, which means they weren't happy with the first one, but the seller probably was, a reconsideration of value, and claims that an appraisal has a problem. So you may, as a buyer, have a clearer process if the appraisal comes in low, the appraiser misses upgrades in the house, there's weak comp sales, it contains factual mistakes, or there's some type of unfair treatment that was given to the buyer. Matt, I mean, I'll ask Matt a question. Is it now more lender to lender, like how the process is handled? Is that why they're maybe trying to make some changes to make it more uniform?
Well, there is a defined process that, as I understood it, was kind of set forth at least in part by FHA. USDA not so much. FHA a little bit. VA all the way. VA is very strict on the way that they handle things like this. The thing is, like, I'm going to go to soapbox for a second. One of the pieces of the entire puzzle of buying a house that hasn't been addressed since 2008's financial crisis happened was that lenders and agents and title companies all got the crap kicked out of us from a law standpoint. The appraiser is the one piece of the puzzle that's more or less an untouchable, because, for example, reconsideration of value. Now, maybe they put into place a more formalized process for requesting a reconsideration of value. There is one of those in place for like VA, so I imagine they'll just kind of mirror what they got going on there, if anything. You're basically going up to somebody that does a job for a living and saying, "Hey, you did the job wrong." Um, in my experience, that doesn't go very well. The one most spectacular time that I've had an appraisal get reconsideration of value actually accepted was whenever I realized after a quick review of it that they had pulled a comp that was an appropriate comp, but the sales price was the sales price for the home 4 years before the most recent sale of that same home. So it was like it tanked the comparables. It was like I'm skimming along. Like, why is this one substantially different than that? One of these things is not like the other. It was one of those type things. Um, so, and from the appraisal having a problem aspect of things, I think that the biggest problem that you're going to see claimed in a lot of cases is any sort of like discriminatory treatment based on anything you can imagine, that is usually traditionally discriminated against, I suppose. Um, I think it adds up to a whole lot of nothing, um, other than potentially having some extra forms to send you if the appraisal doesn't come in appropriately. Our company, I can't speak for other companies. Our company, in any case, even if the appraisal comes in good and at value, we send out a paper with the appraisal every time that's like, here's how to do a reconsideration of value. Um, if the appraisal comes in good, you don't even need that. But we just, for consistency's sake, it goes to everybody. So, I imagine a lot of other companies are doing similar things because you also, the thing too, you hit on this earlier in it on one of the other points. There's still state laws that have to be followed, um, state to state, that this isn't going to change anything for. And those state laws are going to be probably a little bit more restrictive in things like reconsiderations of value than what the federal law is. And if you got a company that's operating in all 50 states, plus some, like ours is, the plus some being like the territories, then you're just going to probably go with the company policy that's the most conservative of all of them. Um, so, yeah, I mean, I think it could be helpful. Now, one thing to know, like from a real estate agent standpoint, because this is a real pet peeve of mine, is whenever a appraisal does come in low, don't send in comparable sales that are not sold yet. That's my favorite. I don't know if you've ever seen anybody try that, but like, hey, here's this listing that's been listed for 6 months that we'd like to use as a comparable sell. It's not a comparable sell if it wasn't sold prior to the appraisal being ordered. Sold, not listed. So anyway, I'll end my TED talk with that. On number 5, one of the big things that it's pulling in now is that veterans should receive clearer loan options. The thing that they're looking to add is a um, more specific service related question to the mortgage application. The thing is, the mortgage application that you fill out with any company is going to be exactly the same from company to company. It's completely consistent everywhere you go. Now, some of the specific verbiage in the interface that you use to answer it may be slightly different, but the end question that we have to fill out is exactly the same. So they're going to be making sure that it flags a little easier that somebody's a veteran and may have options that are VA oriented. Sometimes those options are better options. I know that for me personally, I'm always going to make sure that if you're a veteran, that we take care of you as a veteran and make sure to give you the options that are available and let you pick from the pros and cons. The second thing is they're going to give a comparison eventually to disclose the difference between a FHA loan and a VA loan. There's some circumstances where I could see potentially an FHA loan maybe being a little bit cheaper. Um, that's a very narrow list of circumstances, though. It would have to be a situation where the FHA loan was, or the VA loan was going to be a repeat usage type scenario where you're paying like a 3.3% funding fee to the VA, because otherwise, if it's your first use or you've got a service connected disability or something that's going to take out the funding fee, there's nothing that's going to take out the 1.75% funding fee on an FHA loan. And on FHA, you've got mortgage insurance is either a 0.5% or 0.55% for either the life of the loan or 10 years of the loan. You don't have mortgage insurance on a VA loan. So, that's probably much ado about nothing. It's something that's part of my standard process to compare the two. Also, a VA, you don't have to have a down payment in most cases. With FHA, unless you're using down payment assistance in addition to it, you do. So, it's something to consider there for sure.
All right, so moving right along, the big thing that we need to also discuss is what's going to happen for sellers, because obviously this impacts sellers too. We've talked about everything more or less from the buyer's perspective so far on today's episode. But on the seller front, obviously the first thing is 1% of the ownership, like we mentioned earlier, of private single-family residences in the country are those large corporate bidders. You're probably going to lose out the opportunity to have those specific large corporate bidders. But again, it's probably statistically 1% of the potential offers out there. So, it's kind of like a take one for the team for the greater good kind of thing, right? And it'll also impact maybe a little bit because of that, like entry-level houses and 3-bedroom like homes outside the city a little bit more, because that's the target market for what those big companies tend to like to buy is exactly that starter home that's your 1,200 to 2,000 square feet, 3-2 with maybe a garage and 2.5 baths and the perfect yard for your 2.5 children and golden retriever out back or whatever. Now it could potentially lower seller prices in certain neighborhoods, maybe more than others, because they have an appetite for certain things. It's also going to make it a little harder if you're somebody that's got a house that needed to be sold as is, that might be in that sort of first-time home buyer retarget market where maybe it's just got a lot of repairs and crap that need to happen to it, and you can't because financial reasons just preclude you from making it happen. There's going to be less just cash offer situations out there potentially. You still have the smaller investors that can still come up and write a cash offer, and that'd be the type of thing that you'd for sure want to get with Ann Riley on is like see what investor options are out there if you needed a quick sell or an as-is type sell or something like that. Now, the next thing is over time, it could actually go the other way and create more housing competition. And in doing so, what they're really trying to do with some of the law is give faster environmental reviews because, some jurisdictions, the federal government takes obscene amounts of time to approve construction on. Again, we're talking federal government versus state governments. The state government can still slow walk you as slow as they'd like to because this only impacts the Fed side of things. So, if it's something that's a piece of property that's government oriented to begin with, that's federally government oriented to begin with, it could be a little faster to get approval to build the thing. They're also adding some grant money out there theoretically in the future. And more money to add to housing supply as funds are available. Again, there's just so much of this thing that's just like, we might do this, we could do that. They could give you a unicorn chocolate shake and $1 million. Who knows? But I wouldn't bet on it. Then the other thing is you'll probably see more construction a little bit faster if builders are able to get things pushed through a little quicker because there's less red tape nonsense going on. In that case, you may, as a seller, have to compete with a few more new homes. And depending on the new home construction quality and methods, the new home probably will be more appealing to a lot of customers. So it's something that could potentially put you in a smaller sales price bracket. And, that's the thing. the whole point here is like the people that don't own a house right now are stressed out because home prices are so high. But all of the people in America that do own a house would be stressed out because they don't want the home values to decrease. I don't want the home value to decrease. I'm sure if you already own a house, you wouldn't want it to decrease either. But you can't really have your cake and eat it too. The home values are either going up or down, and if they're going up or down, the average home prices are increasing or decreasing with them. It's one and the same. It's all connected. So anyway, the big thing though is that they're also offering up potential public land databases to give the ability to use some public lands for future development sites and give an ability to build more affordable housing on a space that might not otherwise have been relevant. This kind of falls in that same category of like, there's really not that much land that this applies to. But for the land that it applies to, cool. What I understand of a lot of that land is it's not in a desirable location you'd really want to live in anyway, but that could change. People live in Arizona and it's 1 billion degrees there with no redeeming qualities except for the red dirt, I guess. I don't know. No offense, Arizona. We love you too. Now, the biggest thing that's going to impact the Middle Tennessee market, our local market that Dan Riley and I live and work primarily in, is going to be like there's going to be a few less institutional rentals being bought up. For a while there, it did feel like there was a ton of institutionalized rentals being purchased just because there's so many people moving into this area so fast that there's just a big demand for it, and the values kept going up enough for it to make sense. The other thing too is the manufactured home side of things. If they do loosen up what's required on that, there's a ton of manufactured homes in the more rural Middle Tennessee counties. I probably work on a manufactured home or two each month. Like they're definitely out there. There could be more housing grants given out too. We don't know what those will look like yet. Again, unicorns and chocolate shakes, right? And there's going to be the test pilot program for the small loans. Here's the thing. I've closed loans that are already in that size anyway. Maybe it makes them some way more affordable or more appealing to do. But for most actual first-time home buyers that really would find that relevant, good luck finding an actual house that's habitable for $100,000. In short, the whole thing to take away here is there are some things here that seem like genuine improvements. And if a lot of the maybes or even some of the maybes come true, those will be improvements. The thing is, this is not going to be what changes everything for the housing market. This is not going to be the thing that's going to make you able to afford a home that you otherwise used to couldn't afford in short order or anything like that. And this is not going to be the thing that I think actually crashes the housing market, because just imagine how pissed off all the boomers would be if the housing market actually did drop in value. Yeah, there's a lot more millennials and Gen Zers that would love to buy a house, but like, you'd lose a lot of the voting base. So they're not going to do anything that's going to screw that up too bad. So, if you got one takeaway from this today, it's that it's pretty good, not great, not life-changing. And if you've got any questions at all about any of this, shoot a message to myself. If it's a mortgage-related question, if it's a real estate-related question, shoot a message to Ann Riley. And what we will would be happy to talk through any specifics to your scenario. And thank you for joining us on Smart Moves Made Simple, where we want to help make your moves a little smarter, a little simpler.